Welcome to Echo Trade. It's Jeff Roth, your host. And today we have a portfolio update coming from Sparrow Capital. So we brought in Gerry Sparrow, the founder and president of Sparrow Capital Management. And we're talking about their portfolio, the current events, the news, which is available on Echo Trade and performing fantastically this year. And so, yeah, we're going to jump in and get the update from Gerry himself. All right. Hey, Gerry, how you doing? Good to see you.
Good to see you, Jeff.
So lots to talk about. The market's going a little bit crazy today with some positive inflation numbers. But first, let's talk about the portfolio. Just, give me the overview of this year. Kind of what kind of major economic conditions have, occurred and that have affected the portfolio. Obviously, interest rates and inflation have been a major driver this year. But you kind of tell us what the biggest conditions that you've seen that have been had an effect on the portfolio.
Well, we're in we started the year in three sectors. We're in technology, the healthcare, and financial services. And we've eliminated our healthcare position, and now we're either in technology or financial services. And the reason is because there's been somewhat of a deflationary period and also a slowdown in healthcare spending relative to these other sectors in the market, financial services and technology. So those were the changes that we made this year.
Got it. And so like we talked about today, we had some good inflation numbers, like you said, a little bit of a deflationary period, at least kind of trending that direction. And so we're having a really positive reaction, and rates have dropped a little bit as well, treasury yields. So a real positive reaction in the markets today. What are you kind of seeing, like at least in the present moment, that's having the biggest effect, and have the changes that you made have been positive, from what you've seen thus far with the current conditions?
Yeah, the current conditions of in particular inflation, when the U.S. Treasury 10-year note hit 5%, I became really bullish, because if you go back 100 years, the average Treasury yield's about 4%. And in 2002, 20 years ago, the Treasury hit 5%. And since that time, the Dow Jones Industrial Average in 2002 was at 10,000, and now it's at 30,000. So the market tripled in value the last time bonds hit 5%. So once they hit 5% this time, I've been pretty bullish on the next 10 years of the market, and in particular, technology and financial services, those sectors. So in today's news on inflation, dropped interest rates, and so my macro viewpoint is actually coming to fruition pretty quickly.
Got it. So I mean, that's a long-term outlook. What are you thinking for next year within the portfolio?
Well, right now, it's hard to know, what's going to happen next year. We just received third quarter reports from all our companies, Apple, Microsoft, et cetera. And most of those reports were positive. They had growth in earnings per share, in particular unit volume. So I think the economy continues to shift online, and people want to get their information quicker. They want to get it in different places. In our portfolio, and especially artificial intelligence, that is in the news a lot. And so we're taking advantage of those trends with our positions in the portfolio. And that's kind of the name of the portfolio, current events, the news. So we watch what's current and what's going on in the economy, where unit volume, consumer spending is going, industrial spending, government spending. It's going in the areas that we're invested in. So we're very positive, and I think the portfolio it's doing well this year. We expect it to do well next year too.
So you mentioned AI specifically, and obviously, like you said, the portfolio is current events and news, and you're looking at what's topical, what's trending in the market, and what's going to have positive outlook in the future. AI obviously is on the top of that list. how are you getting exposure to AI? Are you investing directly into some of these AI companies, or are you investing into some maybe kind of larger blue chip companies that can have that are invested in the AI tech and have kind of an ancillary exposure?
Well, it comes out in a lot of different ways. In particular, for our portfolio, we have the technology companies that produce the chips that runs artificial intelligence. So in data centers, in your phone, in your computer, your whatever device you're using, or in industrial uses, they have to have computer chips to run at high speeds. So we have investments in companies that are producing those chips for industrial and consumer and data center use. So when Google wants to create another data center, or if they want to use AI in their search engine, they're going to have computers to run that search, and they're going to have chips. We own the chip companies that they'll be buying. And also the other places it shows up would be in, as I mentioned earlier, Google search. And if you're even responding from a text, I don't know if you've noticed on your phones, but a lot of times it inserts your response and you just choose whatever you want to say, right? That's artificial intelligence giving you choices. So it shows up in a lot of different places that you normally don't think it would be.
Yeah, it's interesting. So lastly, I mean, you mentioned, heavy on tech and you kind of, eliminated the healthcare position, but heavy on tech and financials right now. So we're talking about tech, all the optimism around that with what the market's doing, but talk about your investment on the financial side and what has you optimistic there, kind of in the next few months and next year and moving forward.
Yeah, on the financial service side, we're in the property and casualty insurance area mostly, and the reason why we're in property and casualty insurance is that there's been a significant inflation. We've been through a pretty good inflation period, so people are going to have to, if they want to insure their buildings or their cars or whatever, they're going to have to buy more insurance to cover. I don't know if you own a home or don't, but if you own a home and you insure it every year, the rates are going up. They raise the rates. Those are property and casualty insurance companies. So they're able to raise rates. You're going to have to buy it. People don't want to be uninsured. So we can benefit from those trends in the portfolio.
Yep. No, I'm all too aware. I'm actually in the process of buying another house right now, buying a new home right now, making the terrible decision to do that with interest rates sky high. But I'm hoping, with that, we'll touch on the housing market. I'm curious what you think. The expectation is that the Fed will start dropping rates next year. I think now they're pricing it in for next July. I'm curious what you think about that from an inflationary perspective, as that's going to add a stimulus to the economy, and then we could have another uptick in inflation. And then what do you think from a housing perspective? With rates dropping, there's all these people on the sideline, an influx of new buyers that could have another rate drop, but another kind of big boost for housing prices in probably the wrong direction, where there's already affordability is drastically it's unaffordable right now for the majority of Americans.
Yeah, I know that I think the average price of a home is around $350,000 nationwide, and so you have to have a pretty decent income to buy that home. Thankfully, about a third of adults over the age of 20 have college degrees. So a lot of folks are educated, and the other 2/3 are just working their butts off, to pay to make ends meet. So I think that there's always a supply and demand balance or imbalance. And it's been somewhat different this cycle because you had all the people that were in the homes and they wanted to trade up, but they had the low interest rates on their mortgage.
They're not trading up from a 3% interest rate to an 8% interest rate. That's a fact.
That's insane. You get the same home, but you're paying more money. It doesn't make any sense. So the existing home sales went down. They weren't going crazy because people weren't putting their homes on the market. They were just staying put. So I think the Fed, from a global perspective, I think the Fed has done a really good job in slowing inflation down as we're getting reports in, better than expected. And I think that we're all going to benefit from lower inflation this year and next year. So congratulations to Jerome Powell.
Yeah. So you don't think that if they start dropping rates next year, it's only due to a positive economic reports that would be a stimulus?
There will be a stimulus. Yeah. No. Recently, mortgage buyers accelerated with just a small drop. People are sitting on the sidelines. As soon as you see a small drop in interest rates, new mortgages accelerate. So
yeah,
and the faster rates go down, the more people are going to buy and move, and keep the economy moving. So that's a big purchase.
Yeah, but you don't think that would cause inflation to rise back up again?
Well, I mean, it could, but I don't. It takes a while. It takes a really long time, maybe 3 to 6 years to build up. Because I think a lot of this inflation was, and I hate to bring it up, but it was because of the pandemic.
Mm-hmm.
We had all the supply chain issues. We had a lot of helicopter money, PPP loans.
Yep.
There was a lot of money pumped into the system, and it had to kind of like work its way through. And it has worked. I think it's worked its way through. I think we have really good sailing in the markets going forward, at least for the next 10 years.
Yeah.
I think it'll take a long time to do what has happened in the last year, which was lousy inflation data.
Yeah, absolutely. There was a lot of money pumped in the market, and maybe some say that the Fed, kind of held the rates a little bit too low for a little bit too long. But positive outlook from Gerry. I appreciate the insight, and the portfolio, the current events and news has been absolutely killing it this year. I think up 40% on the year thus far here in November. So hopefully it's another positive year in 2024, and we love having you as a partner. Investors, excuse me, you can actually take a look at Gerry's portfolio from Sparrow Capital, current events, the news. It's available on Echo Trade. Gerry, appreciate your time. Thanks for being here.
Good seeing you, Jeff. Have a good day.